All right, I hope everyone had a great holiday season, a great New Year's. We were in Disney along with, I'd say, 400 million other children that were on vacation from school. Had a good time nonetheless. We're in our new house, so I'm doing this from the only room that has rugs right now so that you won't hear echoes the whole time. But anyways, that's what's going on with me. You're probably here to talk about some real estate, so let's kind of get on with that. All right, if you'll think back at the end of last year, I said what was really driving our real estate market, or the lack of sales in the real estate market, was interest rates, right? So to give some context here, interest rates on a 30-year fixed mortgage, January 22, were around 3.5%. January of 2023, they were up 200 basis points, up to 5.5%. And by October of 2023, they were up another 200 basis points to 7.5%. So from 3.5% to 7.5%. And again, that's what really screeched the market to a halt. So the thesis has been, if rates were to drop, buyers were going to enter back into the market. So here we are. Rates have eased a bit, about 100 basis points from that October high, from 7.5% down to 6.5%. So the big question is, has that added some velocity into the market? Are buyers coming off the sidelines? Because if our whole thesis revolved around higher interest rates or slowing sales, lower interest rates should have sped them up. So what does the data say? And I think that's going to be something that we're really going to want to keep an eye on. A couple of people asked me about if I see interest rates headed back to that 3.5%. Honestly, no, I just don't. You never know what can happen, but I think that that whole higher for longer thing is probably what's going to play out. It seems to be the Fed's pace right now, and I think that's kind of going to be where interest rates go. So anyway, because the data does look back 30 days that I give you guys, and we all know seasonality, what do we talk about again and again? December is a terrible month for sales. So the data is probably not going to reflect that reduction in interest rates. Anecdotally, I can tell you this. I've had a lot of buyers coming off the sidelines, a lot of people who are saying, no, I'm going to wait. Suddenly they're now back in the market. Conversely, a lot of sellers that were going to wait out the market until interest rates peaked and started coming down, they've also started calling. So I think there's more inventory that's going to come to market, and I think more buyers are going to come back into the fold. We'll wait and see how it all plays out. Again, at this point, it's just anecdotally based on what I'm seeing in my own business and what I can kind of tell you. Boots on the ground anyways. So how do you navigate this market as a buyer or a seller if the interest rates are going to be higher for longer? My opinion is you're going to have to get creative. And I think one of the easiest ways right now to get creative is for sellers to offer a buy down on their interest rate or a credit towards their closing costs so that they can buy down the interest rate. And why does this make sense? You have to do the math behind it, and if you're working with me, we'll run through this scenario. But a 1% reduction in interest rate could end up equating to $100,000, $75,000, $100,000 more in value. So if you're a seller and you need to offer 20 grand to somebody to buy down their interest rate by a point, but you'll end up netting 75 or 100,000 more because the payment is comfortable for the buyer, that's just what you got to do. I mean, you'd be crazy to reduce all the way down by that 80 or 100,000 so that the math works for the buyer instead of offering just to buy down their interest rate. There's a lot of moving pieces to it. It's not quite as clean as we're used to seeing deals over the last handful of years because we didn't have to deal with stuff like this. But I do think it's a smart way to structure deals. And if you're a buyer or seller, it's something you got to talk to me about. Because I just think it's a way that you can get deals done that the kind of back of a napkin looked like they weren't going to work another way. All right, so let's get on to the data. I'm going to turn my screen around here and let's start with single family homes. All righty, Fort Lauderdale, single family home data. Let's start it off. Median home pricing. You guys are in for a treat this month. I'll do the sales brackets so you can see where the market's actually moving. So we're going to kind of briefly look at this one. Look, this will get my attention if we drop below 500,000, but for now, December, weak month, not a surprise. All right, number of properties sold. This is the one that matters the most, right? Is a lower number of properties sold in December a surprise? Again, if you said yes here, you haven't been paying attention to the data that I put out or heard me speak. December, historically, one of the slowest sales months every year. So if you've been paying attention, flat month, no real surprise for you. Year over year, this is actually up by 26 sales. But again, let's see what January data brings. List to sales headed back down. Again, what this really means is how accurately sellers are judging the market, how close they are when they list their property to what they actually receive when they go to sell it, right? So if sellers are overestimating the market, this is going to lead to a larger spread. Same thing, if buyers are negotiating well, it's going to create a larger spread. In a feeding frenzy or in tight price points, you don't see a lot of movement here. But when you do see movement, again, it means somebody's getting the better of somebody or somebody mispriced. So that's kind of all to really see there. Median days. Here we go. Rose, not great news for sellers, right? But again, it was December. So down from 37 days year over year, but let's not get too excited yet. That being said, it looks like there was some relief for buyers. Remember how I said it's good to be a buyer in December, not so great to be a seller? So kind of case in point here. We can kind of breeze over price per square foot. Clearly, the overall trend is up, which continues to make sense, right? I've said it many times. Buyers want properties that are nice, renovated, turnkey. They look good. They smell good. Those are going to carry a higher price per square foot, and there is just this flight to quality. There is not a whole lot of HGTV, I want to make it my own, find me the fixer-upper. I don't hear that from buyers at all anymore. A few years ago, that was really what a lot of them were looking for, and I think that's all fun and games until you've gone through a renovation project yourself, and then it's not so fun anymore. Total dollar volume continues to be a non-surprise for me and hopefully for you. The bulk of sales are taking place at lower price points, so it's going to take a lot more sales at the lower price points to get the total volume up in a significant or a meaningful way. Until we can really get the higher end of the market to start participating. So, finally, another stat near and dear to my heart: months of supply. Looks like we're backing off that 6 months number, which is good for sellers. December of 23, there were 4.43 months of supply, now up to 5.12. So would have been better to be a seller last year and a buyer this year, but again, it was December. We'll see what January looks like. I wouldn't read too much into this yet. All right, ladies and gentlemen, here it is. Sales data by bracket. Once again, where's the volume of sales actually happening? Just over 42% of sales took place below $1 million. Okay. The highest number of sales is taking place in the lowest price brackets. Where's the most competition for buyers going to be? Lowest price bracket. Where is it easiest to be a seller? Lowest price brackets, right? Month after month, this is what we keep seeing. So don't let the headlines of luxury fool you. That being said, is it a good time to be a buyer on the higher end? Yep. Why? Not a lot of sales means on the higher dollar properties, the sellers aren't seeing a whole lot of offers. Now, what is cut off on this is above $5 million, 3.13% of the market took place above $5 million. So in that ultra luxury, a little bit of a pulse there. But anyways, look, I have a 6-bedroom that I'm bringing to market in Davie.
that's going to sit in one of these higher price points. And this is the same data that I've reviewed with the seller to get kind of a realistic expectation of time on market, despite the appeal of the property. So just kind of a tough market right now for some price points, kind of all up here, right? Just a low number of sales. All right, let's switch over to condos and townhomes. Median pricing rose year over year from 410,000 to 532,000, which is a monster size move statistically. To get a better understanding of this in a contextual basis, let's kind of see how the data feeds in, and of course, look for clues in price bracketing. Now, prices may be up, but transactions, this is ugly. If median prices are up and sales are down, it's telling me that buyers are willing to pay for quality, but still within a budget, right? So we're up against 5-year low on total number of sales. Of course, it's December data, which you knew would be weak, but it's something to really keep an eye on here, and a distinct advantage for buyers. There's just not a whole lot of sales. List to sales, tanking, just tanking. So again, what does it say? Sellers are having to negotiate. They probably came on the market a little too high. And buyers are willing to ask for concessions, and they are willing to ask for reductions in price. So of course, best strategy here is to not overshoot the market and price correctly from the start. But this is the data. Median days on market possibly leveling off here. Double the days on market from December of 22. Of course, more days on market can mean a number of things, from too few buyers to overpriced properties. But if you're a seller listing with me, I'm going to tell you, look, be prepared for a longer time to contract. That's just the reality of today's market. Price per square foot still on the higher side. Again, to me, it's saying people are paying for quality, maybe doing so on a budget, but again and again, and I think you just see it play through in the data. Buyers are willing to pay more for a quality product. So look, if you're trying to list something that's junky and outdated, you've been warned. Right now, everybody wants the modern look. If you've got multicolored walls all over the place, you need to get them painted, ideally white, but worst case to some kind of neutral tone. But if you're in a situation where you're just going to throw the property on the market with old furniture, old colored walls, outdated kitchens, just be prepared, man. It's just not what buyers are looking for right now. So keep that in mind. Total dollar volume, just wow. I want to take a moment and address something that doesn't show up here. Pre-construction condos are being sold along the beach at a relatively strong pace. Those sales don't get loaded into the MLS very often. Those are higher dollar sales. And if you're a buyer looking for that product, which is what a number of the buyers that I work with honestly are looking for, throw all this that I'm showing you out the window. This is just for resales. So if the sales pre-market, say it's Celine, had been loaded into this month's data, and especially over the last handful of months, you would have shown a big bump in the pricing across the board. But I digress anyways, just something to keep in mind. And as always, depends what price point you're looking at to see how this data affects you and kind of what's going on in the market overall. But existing sales, condos and townhomes, just brutal. So we'll see what January brings. All right. I know a lot of you that follow me also follow the stock market. This month's a supply chart. If it was a stock you owned, you'd be thinking, wow, looking pretty good with a little bit of room to run here. Above 6 months of supply favors buyers. So if you're a seller and you're looking at this chart, you're not too thrilled. We're through that level and then some. So if new listings hit the market and buyers don't pick up their pace of sale, expect this chart to get worse. Better for buyers, worse for sellers. All right, let's take a look at the bracketed data. Who wants to be a seller below 750,000? Half the market activity is taking place there, right? Thankfully, I have a couple of listings coming up in this bracket, so I'm a happy camper right now. But look, all joking aside, and let's be fair here, it's also better to be a seller of a condo or townhome above $1 million than it is to be a seller in the same bracket of single-family homes. It's kind of wild, right? But that's what the data is telling you. See, look at this. These are pretty big percentages. Remember the single-family home data? This stuff was zeros and twos. So anyways, that's it. That's what I got for you. As always, feel free to call, text, or email me if you're looking to buy some real estate in or around Fort Lauderdale. Whether your timeline is a week from now or a year from now, I'd love to chat with you. We'll see you guys next month.